Hey everyone, welcome to a weekly analysis. It's currently the 5th of December today, 2021, and about 12 hours until market open from where I am. As usual, we'll be analysing our major currency pairs, be looking at gold and global equities. Firstly, we'll look at what macroeconomic data is going to release across our major economies. Then go to the chart and map out potential trade ideas with the technical and fundamental confirmed. So firstly, let's go to US and understand what data is going to be released. So firstly, I will bring this up. So it is December, so last month of the year. People getting ready for the holiday season and so forth. But from my experience in trading, December tends to be a lot slower compared to other months. My reason for it is a lot of the banks, the financial institutions, pretty much the people that actually move the market. To me, they're most likely close off their positions and rebalancing their portfolios, and so there's a lot less volume and a lot less liquidity in the market, so you're not really going to get clean price action or clean moves. You are every now and then, but it's not going to be as consistent, compared to trading from mid-January to basically November. To me, you're not going to get like the cleanest moves. That's just my opinion, and that's just from my experience. If you do wish to trade, go for it. It's completely up to you, but this is just my opinion. Alright, so moving on, we do have a bit of data coming out throughout this week. So on Tuesday we do have trade balance numbers coming out, along with quarterly non-farm productivity and unit labor costs. On Thursday we do have initial jobless claims numbers as usual, and on Friday to end the week we do have CPI and Michigan Consumer Sentiment Index. So we do have inflation numbers coming out, and we do have the monthly budget statement to end the week. So plenty of volatility. It's like we can definitely see some volatility, especially around the inflation numbers, and we might get a bit of a spike or a bit of momentum with the goods and services trade balance numbers. That's probably one thing, or there's probably a couple of things that I do want to point out when trading our US equities and the US dollar itself. So moving on to UK, we do have construction PMI, along with Bank of England member Broadbent speaking. We do have like-for-like retail sales on Tuesday, and on Friday we do have goods trade balance, along with industrial and manufacturing production being released. Okay, so just by the looks of it, especially with the US and the UK, we're probably going to see some nice end of week flows based on all these data being released. So just being very wary of that. Moving on to Europe, we do have Syntax investor confidence along with the Eurogroup meeting, and we do have employment change and GDP numbers, along with Zoo's survey. So we can definitely see some volatility Euro throughout Monday, but mainly on Tuesday. So not too much data coming out of Euro this week. Moving on to Japan, we do have GDP numbers coming out on Tuesday. There isn't any major data coming out except for GDP. Sorry. Moving on to Canada. On Tuesday we do have the IV Purchasing Managers Index, and on Wednesday, big thing we have is the Bank of Canada interest rate decision. So one thing that from my experience that I've come across is that pretty much every single central bank follows the Federal Reserve. Like the Federal Reserve is like alpha, like king. So it doesn't matter what's happening in the Canadian economy, whether unemployment is at record lows, whether inflation is anchored at a safe 2-ish%, and whether we're having great PMI, great ISM numbers. Overall, it doesn't matter what the hell is happening in that economy, whether we're having like a massive trade surplus, whatever the case. they will, like, no matter what, they will follow the sentiment from the Federal Reserve, because it's the world's reserve currency, and pretty much every country is somewhat tied in with the US and China. That's another story. But yeah, just remember, you need to, like, if you want to understand what's going on in the world, just follow the Federal Reserve, because most other countries will follow, most major economies follow. Emerging markets are a bit different, but yeah, most of the major economies will follow. Anyways, so Bank of England interest rate decision. So we know that the Federal Reserve has begun to taper, and they actually want to accelerate the tapering based off their speeches, especially from Jerome Powell and other central bank members. So I believe it was 2 months ago, the Bank of Canada pretty much said that they were just going to completely stop buying additional government securities. They're only going to be buying ones that are outdated, okay? So pretty much when a government security expires, they're going to buy the next one. They're going to buy it to the next maturity stage, okay? So that's a very accelerated stage of tapering, but they weren't buying as much securities. I think they're only buying like $20 billion a month. The US is buying 120. Anyway, so the Bank of England's interest rate decision, and based on the strong employment numbers, we can definitely see a lot more appreciation and growth throughout the Canadian economy. So yeah, that is probably one thing to be very careful of, because I won't be surprised if they start to be a lot more hawkish and start to strengthen the monetary policy and string away from a accommodative monetary policy. Anyways, going on to Australia, we do have interest rate decision this week. TD Securities inflation numbers coming out on Monday. We do have home price index being released. And prior to the interest rate decision, we do have China trade balance numbers. So yeah, that'll be very impactful. So we should see some volatility with the Australian dollar and then the interest rate decision. And the thing is about the interest rate decision, if the Federal Reserve, if the US central bank, the Federal Reserve is anticipating to quicken the taper, like they're anticipating the taper to be completely done by like March 2022, and then hike rates by June 2022. So that is very hawkish, and more than likely we also have the Reserve Bank of New Zealand already increasing rates. The economy didn't really get hit hard. Like the New Zealand economy barely got hit. So that's very understandable. One of the reasons for that, they're trying to cool, they're most likely just trying to cool the housing market down, and they've already met the monetary policy mandate, or they've already met the requirements to increase rates. Anyway, so the Federal Reserve being very hawkish and encouraging stricter monetary policy, the RBA will more than likely won't delay their rate hike forecast. So more than likely, the rate hike forecast is by 2024. I won't be surprised if they actually bring it forward to potentially Q2 2023. So don't be very surprised, and if we see that, we can see a bit of appreciation in the Australian dollar, but to me that will be a temporary spike overall. I'll go to the charts, and I will map out potential trade ideas and identifying sensitive price levels that we are encountering at the moment. Anyways, day after that we do have Governor Lowe speaking, and on Thursday we do have Chinese CPI numbers, so inflation numbers, and we do have foreign direct investment in China. So now we understand, there's plenty of data being released this week, but yeah, probably a big thing, we've got two central banks coming out with their interest rate decisions. We've got Euro unemployment numbers. UK, we got trade balance numbers, trade balance, manufacturing, industrial production numbers, which is pretty much, it all ties in, and inflation numbers in the US. So anyway, we're just going to go on the charts very quickly. So let me just zoom out a bit. So I'm going to daily. I don't really go on the daily to do my weekly analysis, but we are right now. So alright, here's the thing, right? We are at a very key decision level. Okay, if we get another 4-hour close below roughly the 70-cent mark, we can continue to push to the downside. But honestly, I think we are going to get a bit of a pullback structure. Okay, I reckon we're going to get a pullback structure to roughly potentially to these previous lows here, okay, to 71,400, and then potentially push further to the downside, break and retest close below here, come down, and then I'll be targeting this liquidity level at 69.4. Oh, 68.5, sorry, 68.5, and then continuing in the bearish structure. But I do believe that we are going to get some pullback structure. Yeah, because like pretty much to end the week, yeah, to roughly end the week with this being on this massive decline, and to start the week, just to start the week off, I don't think that we are just going to continue and melt down. Obviously it's a possibility, but this is a very sensitive price level, and to me, I believe this is going to happen across Euro and GU as well. But I'm not going to take some sells if the new 4-hour closes below here and we can push further down and see more sell orders being triggered and push further to the downside to that 68.5 mark. So yeah, that's what I'm seeing. But let's go back to the 4-hour. So obviously, you know, it's strong bearish structure, mainly due to the Federal Reserve sentiment of accelerating their tapering process, and more than likely getting closer to a more stricter monetary policy, which means printing less money. Okay, when they print less money, their currency becomes a lot more valuable, and their currency becomes a lot more valuable to foreign investors. All right, because if an economy is flourishing, they're most likely going to be buying government bonds or those sovereign bonds, because they will get a higher return compared to their own country or other countries, for that fact. Okay, so yeah, moving on. Yeah, and even on this 4-hour here, you know, we did get a nice retest at this low here, and yeah, we got a bit of a messy retest low here, but this was pretty solid because we did have this bit of accumulation phase. Didn't really get the full retest, but we did actually push further to the downside, and mainly. Also, one of the main reasons that dollar started to fall off at the end of the week was based off US employment numbers. So, US employment numbers, right? NFP was pretty trash, you know, like well below market expectations, but unemployment went from 4.6 to 4.2, right? For unemployment to go down 40 basis points, that's astonishing. That is astonishing, and it actually did make sense with initial jobless claims, meaning that pretty much like pre-pandemic lows, which is crazy because initial jobless claims is people applying for unemployment benefits, okay? And if we're at pre-pandemic lows, obviously the economy is flourishing, okay? So that will lead to more stricter monetary policy, okay? It means that more of the country is employed, means more people have money to spend, which means they can eventually hike rates. So yeah, so that's what I'm seeing on Aussie at the moment. Obviously, I would like to get like a pullback structure here, or potentially to 70, even to 71. If we can retest this previous low and then push further down, I won't be surprised. But if we do get like a pullback here, you know, it is very possible. But to me, with the current structure and the current momentum, yeah, we should get a pullback to 71 PPL. So moving on to Eurodollar. Just give me a sec. Yeah, so Eurodollar is actually pretty messy at the moment. Obviously, we can see this nice bearish corrector structure starting to form here. A lot of weak side, buy side liquidity here. So what I'm trying to see is, okay, we've actually got these. We've got this low here. I do want to see if we can actually retest here, grab some. So we got like this little lower time frame descending channel being formed, this area here. So we got lows here, highs, lows, highs, and then we are steadily coming to the downside. But overall, I am seeing this bit of corrective structure from this strong downside move. Am I going to start going to Euro longs? No. Is my buy shifting from shorts to longs? Like, completely no. But the thing is, right, when the market is bearish or bullish, you gotta like you got to anticipate the pullbacks, okay? Like obviously you're going to get a lot more impulsive moves, but you can still get clean moves to the upside, okay? Like you can't just keep holding sells, okay? Because in market structure, right, if we're bullish, it's like this, okay? It's like this: impulse, pullback, impulse, pullback, impulse, pullback, so forth. That's what it is. Obviously your pullbacks are, so your impulse is gonna be like this, and then your pullback's gonna be like this, and you get to a liquidity level, then you ramp up, and then it's just slow, but you can still take advantage of these longs, okay? 100% you can take advantage of these longs. So what am I looking for? Okay, so to me, I do want to get like a solid retest at 1.12, roughly 600. However, I can adapt to some buys if we get some counterbody closures above here, and be anticipating 114,500 to be hit. Okay, to me, safer sells below here, and I can, yeah, to me these are safer sells below here. And if we do close below here, we can adapt and get like a nice little intraday trade in here, trying to grab about 50 pips. But overall, we are seeing this bit of a bullish structure starting to form. So if we do close below here, we're going to adapt to sells. However, if we generate a high time frame counterbody support here, we can adapt to some buys and then see them continue to the upside and anticipate this pullback structure on dollar. So yeah, that's what I'm seeing at the moment on euro. Alright, so going on to GU. GU, the sells have been actually pretty weak. So after after breaking these lows here, we actually did pull back into the range. So we actually did pull back into the range, and then we actually did retest this low here roughly at NFP, where we had this massive, oh sorry, that's not NFP. So we had this this candle here, that was the NFP move. Sorry, I believe that was the what was this one? I believe that was the Fed interest rate decision, or Jerome Powell testifying. I'm pretty sure this was Jerome Powell testifying. So that was actually Jerome Powell testifying, my bad. And then that's where we had that massive whipsaw move. So anyways, moving on to GU, right? So moving on to GU, I wouldn't be surprised if we do see a bit of a pullback structure, and I'm actually starting to recognize that the impulsive moves to the downside are actually starting to fade out a bit. So it's a bit rangy. The price action isn't really the cleanest, but yeah, like what I'm looking at the moment, I'm really looking at these counter bodies here, these lows here, right? So ideally, I do want to like close below here. Like I really want to close below here to anticipate further sells, but more than likely we're probably just gonna close above here. Like the Asian 4 hour is gonna close above here, or the Asian 4 hour is gonna rally like 30 to 40 or so pips, and then we can see price pull back to 1.32500, and then potentially snap back into this range. To me, if I see a kind of body closure below here, we can adapt to sells for further sells to the downside. But to me, I don't think after the strong sell-off move, and when I'm looking at dollar, I don't really think that we are just gonna get a strong spike to the upside like early on Monday. So I'm anticipating early in the week that we are just going to get in a bit of a pullback structure, pullback structures, and see price be pushed through a better supply zone. So sellers can get back in and see price get pushed to a better demand zone on dollar. So more buyers can come back in at favorable prices, especially with that data come at the end of the week, such as inflation numbers in US. So that's what I'm saying. So like I was saying, I don't really we can potentially fill this week, but more than likely we will just continue back up and snap back and grab liquidity, possibly at 750. yeah, possibly at 750 or around 850, or even potentially coming down to 133 flat. So I wouldn't be surprised if we pull back to 133 flat and then overall continue in this bearish structure. Okay, yeah, so that's what I'm expecting, to pull back roughly here, because you know we got the structure here. Yeah, so yeah, that's what I'm seeing at the moment on GU. Okay. Alright, so moving on to GJ. So GJ had a strong melt to the downside. Okay, obviously we did have the strong accumulation phase here. Show you. Yeah, so we did. Sorry, let me do that one again. I don't know why I did it there. Alright, yeah, so we did have this strong accumulation phase here, okay, where we're just rangy, nothing really crazy moves, but we did get this candle actually close here, right? To me, if we fail to snap back in this range and possibly just grab liquidity at 150 flat, we can potentially push further to the downside. However, if we get a nice candle body closure here and down a bit of a candle body support, we can potentially just snap back in this range and play along here. But overall, I mean, I am still bearish on GJ, because I'm seeing a lot more inflows into yen, especially with the fear sentiment that we have with the Omicron virus in play. Obviously that's noise, and to me that's just another reason for a pullback. But yeah, I'm really expecting GJ. I'm not really expecting any clean moves on GJ, but I wouldn't be surprised if we do snap back in this range and see a bit more inflows into our risk currencies and risk assets. Okay, so yeah, on GJ, probably expecting, you know, like a pullback during a bit of candle body support, and then it's play back in this range. I will only adapt to sells once we actually close below here. Okay, we can grab liquidity, close below here, but more than likely I think that we are going to correct this initial downside move and just play back in here. But if we fail to close above here, we can adapt to some further sells to the downside. Okay. Moving on to USD Cad. Yeah, so USD Cad has been trending bullish, obviously with the dollar gaining a lot more strength. There was a bit of a whipsaw on USD Cad. Just let me zoom out a bit. Yeah, so there was a bit of a whipsaw on USD Cad. We actually saw USD, you know, we did see USD fall to the downside based off, because Canadian employment numbers come at the same as US. So Canadian employment numbers were like way better than the US, because US was like a bit of a whipsaw with weak NFP but strong unemployment. So with that being said, we did see, you know, a bit of liquidity grab. We didn't really grab at these lows here, but then initially that move just ended up being corrected with a lot more with a lot more inflows into the dollar. So it's getting pretty messy here at the moment, and when I'm looking at the higher time frame, like, this is a make or break level. Okay, and this is why I'm saying that I'm not gonna be surprised if Dixie does a bit of a pullback. Okay, just, you know, just to me, I don't really think there's enough buy side liquidity for us to continue above here. And realistically, looking at the price action, it is looking like that we are starting to exhaust at these highs here. Okay, so yeah, this is a very, very sensitive price level just to be at. So that's why I'm not surprised if we do see a bit of pullback structure. Obviously, USD Cad very bullish on the higher time frame, mainly due to Federal Reserve sentiment, and we have seen like oil drop about like 10 or so percent. I believe it's down to $70 a barrel now. So yeah, if we do see oil start to appreciate a bit more, we can start to see buy side to exhaust, and we can start to adapt to more of a corrective structure and for us to come down. But I don't really, at this point in time, I don't really see us to start, you know, selling at this top here. Yeah, I mean, if you do try and sell this top here, like, it's a very high risk trade, but to me, I probably want to, to me, I probably want to see a bit of confirmed exhaustion. So when I'm analyzing a lower time frame, I do want to see some nice bearish credit structure. So potentially if we break below here, come down here, retest, come down here, retest, and then come below here, yeah, I mean 100% we can identify bearish structure, and we might get some sensitive bounces around these price levels. Okay, but USD Cad, if we do close above here, we can continue back up and push to 129 psychological price level. Okay, so yeah, so that is a potential as well. Come back up here, sorry, yeah, we can get to 129 roughly. Okay, now moving on to moving on to the dollar itself. Okay, overall, yeah, overall, so one thing that I'm keeping notice as well, alright, if we start to exhaust here, because I'm seeing a bit of a bearish structure being formed. Okay, if we start to exhaust at these highs and actually don't grab liquidity at and if we don't grab liquidity at like 96.4, there's a very good possibility that we can start to exhaust at these highs, because the fact that we actually didn't grab liquidity at 96.500, roughly the high time frame key level, and these lows here, okay, it's showing me that there isn't enough buy side liquidity, and then we just did have this massive bearish candle on the 4-hour candle during NY open. So if we close below here, there is a good chance that we can adapt to this bearish structure. Obviously the sentiment is still there, but if we get like very hawkish statements from the Federal Reserve, 100%, you know, we can still adapt to dollar buys. But just looking at the structure, it is looking like that we are starting to exhaust, and I'm recognizing this strong bearish structure being formed. Obviously we're going to see a lot of sell orders be triggered once we start to break below 95,900. But yeah, at the moment it's looking like we are in this bit of a bearish structure, and this will probably be our make or break level at 95,900. Okay, so moving on to gold. Alright, so gold has been very messy. Okay, if we see, so yeah, so gold has been very messy. We can see a bit of a bearish structure being formed here. Okay, alright, so to me this is a very sensitive price level. Okay, very sensitive price level, roughly what's that, 1765, 62, sorry, yeah, so 1762. Okay, so we can see the strong bearish structure being formed, but if we see continued outflows from dollar, we can adapt to gold buys. Obviously the structure is very bearish, but if we fail to close below here, we can go in for some high risk, high reward buys above here, targeting this liquidity level roughly at 1810. Okay, roughly these highs here. But if we close below, we're going to see a lot more inflows to the dollar, and we can see a lot more outflows from our risk currencies. Okay, so yeah, this is a very sensitive price level, roughly at 1760. If we close below here, I actually won't be surprised if there's this like an impulsive melt straight down to like 1750, 1740. Will not be surprised. But if we see more of a pullback structure, yeah, if we do see more of a pullback structure, because one thing I'm noticing as well, right, if we close below on the intraday kind of range, if we close below, right, these candle bodies here, we can adapt to buys. And if we fail to close below here and generate a bit of a candle body support here at 1785, we can adapt to buys to roughly 1810. I'll probably be targeting like 1800 initially, but yeah, we can really target this little range here. You know, that is a nice, you know, 30 pip range to target. So yeah, that that would be like a nice 250 pip range to target. So yeah, so that's what I'm seeing on gold at the moment. Obviously very sensitive price level at these levels here. Nice little bounce here, But if we start to close above these previous candle body closures, we can adapt to some further buys and start to get out of this corrective structure. Okay, only if we get like a nice candle body support here, we can adapt to further buys. US30 has been coming to the downside. Obviously, we've had the Omicron virus, impact the markets, a bit of fear, and also we do have the Federal Reserve accelerating their tapering process, which will lead to interest rate hikes happening a lot sooner. That's why we've seen like Nasdaq take a freaking hit. Like that's why we've seen Nasdaq just get destroyed. But yeah, overall, still bullish on the stock market, because realistically, if the stock market did like a 50% correction, most companies would be screwed. So that's really not going to happen to me, I think, because we were at 36.5. So what's that? It's roughly 3,600 points. So 3,600 points. So roughly, I won't be surprised if we do come down to 3,300. Like that won't be surprising at all. Like that won't be surprising if we actually do come down here, and then continue our rally up into the next fiscal year. So obviously we've seen this bearish corrective structure start to form, and when I'm analyzing some trade ideas here, so 34,800. So 34,800. What I want to see, if we fail to close above 34,800, we can take some sells. And I'd be targeting to these previous candle bodies here, okay? And I'd be targeting further sells once you break below 34k, but I'll be only targeting 33k. And just be cautious. Like if you are selling, the pullbacks are vicious. Like they are very vicious. Yeah, so that's what I'm seeing at the moment on US30. However, if we close above here, get a nice candle body support here, we can continue to the upside and back to all-time highs. But more than likely, once these do start to rally out, we'll like break above these highs, above 36, and potentially target 37. So that's what I'm seeing on Dow Jones at the moment. And quickly, just to end the analysis, just gonna look across the global equities. Like I said, global equities been taking a hit based from the COVID strain. Obviously, because the COVID strain increases lockdowns in areas which came from South Africa, supposedly. So if it increases lockdowns and restrictions in areas, that's going to decrease revenue. The tourism industry is going to take a hit, especially around this time of the year, because people are planning to travel overseas. So if there's restrictions in place and people have to go on quarantine and so forth, yeah, like revenue is going to take a freaking massive beating. And to me, it's just another excuse for people to get vaccinated, but it is what it is. So yeah, that's why we've seen our equity markets take a massive hit. Obviously, we have had probably the main catalyst for it is Jay Powell, saying that he's going to stop the easy money policies, start to increase rates as soon as next year. So yeah, that's why we've seen a massive hit. Japanese been taking a massive hit after reacting at these pretty much 30k, and now falling to the downside. German 30 back to around 15k. EU50 around 4k. FTSE around 7. Aussie around 7. China 50 is just in this messy range. But still very bullish on this time frame here. Probably once you start to break above 16k, we can anticipate and start to climb towards 16.5 and eventually 18k. But yeah, so this has been the weekly analysis. So what I'm anticipating a pullback structure from a safe haven asset, so dollar, yen. Don't really trade it, but Swiss franc more than likely. But I'm expecting a bit of a pullback structure, but overall, bearish on the higher time frame. But anyways, if you enjoyed the weekly analysis, be sure to like, share, subscribe. If you got any questions, please feel free to comment. Hope you guys enjoyed the video.